Welcome to Disagreeable. This is disagreeable. I'm disagreeable. And this is going to be a boring show. All right? This is going to be a boring show for those who aren't interested in making a lot of money and understanding the financial markets on a basic level. If you're in here, please say something in the chat to let me know that my sound is good. This is not going to be the official free class or course or whatever, but this is going to be like a little, this is just basically, I'm making a study note for myself for future reference to how I want to build the framework to explain this system. All right. Let me go ahead and start. And let me drop this right here. Let me know if we are sounding good. All right. So how do I want to go about this? We'll do it like this. We'll do it live, God damn it. Actually, let me give some, let me do this. Let me do this. Let me do this. Let me run a quick, let me do this. 1 second. Let me run a quick tune, see if, wait, was that join out? Like I said, this is boring. I'm not here to entertain. I'm here to educate. I'm here to educate. You feel me? Oh, this is good. This is good. So, yeah, we will run this. I think I produced this like 9 years ago, but we'll see if anybody comes in. Let me know if I'm sounding right, and then I will begin. Just let me know if we're sounding good, and I will begin. Until then, let's go. Let me. You can share a Chrome tab. Yeah. Boom. Yo, one person let me know that the sound is good in the chat, and we will begin. Even if you don't hang around. All right.
(103惑星シド刑務所があるだけの星よ。
デートするには最高さ。
何者ジェーンって子、地球人ではないわね。
ただの可愛い子さ。よろしく。
All right. Nobody wants to let me know the sound is good. It's whatever. I'm getting into it. All right, let's do this. And let me share a window. Boom. Share. So hold up. Now I put that there. I put that there. Excuse me. Like I said. All right. I'm assuming that you have some basic understanding of a price chart and how to interpret one. You feel me? I'm assuming you do. If you don't, and you're interested in that, this will still be of great help to you because in the world of quote unquote day trading, there is a lot of BS. There's a lot of noise, just like there is on a price chart. There's a lot of noise and a lot of things that need to be ignored, and very few things that need to be focused on. You know? So, this will give you what to focus on. If there are terms that you don't fully understand, I suggest you take notes, write these terms down, and then study each one of those terms individually. In the description, I will leave a link to a playlist of videos, which is all you need to ever watch ever. I'm saving you years and years of work. I can't save you the mental torment. That's for you. You feel me? But I'm saving you years of work. Years. Just bear with me. All right? So, what do we want to do? We want to make money, right? And we want freedom. Who has the money? Who has the money? Banks have the money. Banks have the money. You feel me? And banks are moving the money around, and they are fully in control of the price charts. All the millions and millions or whatever number of retail traders, even trading your little measly $100,000 and all this and that, whatever, you are not in control of the money. You are not in control of the movement on a price chart. Okay. So if you're not in control of it, but you know who is in control of it, then who would you want to pay attention to understand those movements on the price chart? You want to pay attention to the banks because the banks have the money, and all the rest is noise. Everything else is noise. You feel me? So, how do you know where the banks are and what they're doing with the money? Follow me. I'm trying to make this as simple as possible. How do you know where the banks are? Let's ask ourselves a question. How do we know where the banks are placing orders? Hmm? How do we know where the banks are placing orders? It seems to be random, you know? That's why they like to call it gambling. Like, and I guess it is gambling, it's spread betting. You feel me? So it is what it is. I'm not adverse and I don't shy away from the term gambling, you know? Because sometimes you have an edge and that edge can serve you well. And that's what I intend to give you today. All right. All right. So we want to make money. Banks have the money. How do we know where the banks are placing orders? So we can ride the wave. You feel me? Well, after years and years of studying, and actually the past 8 months of intense studying, it always comes back to the basics and what we neglect and what we ignore. And we're in, let me say it like this. This is how we can tell where the banks are placing these orders. Large movements. And large, what does large mean? Let me put this down. How do we know where banks are placing orders? Large movements. Wait, yeah. Move, large movements in a short period. You feel me? A large movement in a short period is going to produce a candle of inordinary size. And this can mean different things at different times, but we're talking relative to the other candles. Um, Sound is good. What up? Appreciate it, Iota. We're doing a very boring show. I'm going to explain how you can make a lot of money from the financial markets, and I'm going to save anybody who's interested in it years and years of digging through noise, um, false mentors, and all types of nonsense. So let's get back into it. We want to make money, right? Who has the money? The banks have the money. How do we know where the banks are placing orders so we can ride the wave? You feel me? Let me add that too. So we can ride the wave. And this is a loose framework for my future video that will be very well put together, edited, and everything like that. I'm more explaining to myself and everybody else who wants to listen because the system has been refined and it is what it is. Let me get back into teacher road. You feel me? Okay. We want to make money. Banks have the money. How do we know where banks are placing orders so we can ride the wave? Large movements in a short period. That's as simple as I can keep it. You feel me? What does large movement in a short period produce? And how do I say this? A larger a how is this all be confusing? A large candle, a large Japanese candlestick relative to the other sticks. A large candle, large movements in a short period. A large candle. Now, that's as simple as I'm going to make it right there. Why is this important? Because this large candle that has a small candle, a large candle, and then a small candle produces something called a fair value gap. Why is that fair value gap so important? Because retail traders cannot do this. When this occurs, we know the banks have done something. Therefore, we know the areas of interest that the banks are interested in. So they cannot hide their hand. Now, at these points of interest, we know I'm getting ahead of myself, but I was to say this now. At this point of interest, we know what will happen more or less because we understand what happens at these interaction points. And that can come from a candlestick pattern or a combination of candlesticks, be it and all the market is doing is accumulating, manipulating, and distributing. You feel me? Accumulation, manipulation, distribution. All right. I know if you don't know what the hell I'm talking about, I know this sounds crazy to you. You're like, wow, this is confusing. It sounds like a lot. It's not a lot. Trust me. I'm saving you years. If now let's put this down right here. A large candle. Okay, a large candle. That large candle will produce a fair value gap. If you're taking notes, write down fair value gap, take note of it. If you don't understand what that is, take time to study yourself and only understand what that is. It's not a difficult thing to get down. You feel me? A large candle will produce a fair value gap. Let me show you an example of fair value gap. Fuck it. Give me a second. All right. Second. Fair value gap. Boom. Images. Boom. This one's good to use. There's an image there. All right, I'll share this real quick. I'll present, share, boom, share. So if you're looking at a price chart, this is simply what a fair value gap is. There is no interpretation or this or that, or maybe this is one, or maybe that is one. Nope, that is a fair value gap. Now, do smaller gaps matter? Yes, they matter and should be taken into account, especially if they're closer to this large gap. And in that case, you would combine those. But that's for you to understand further down the line. You feel me? But just understand you need to know what a fair value gap is. And once you understand what a fair value gap is, you need to understand how these gaps are reacted to. All right? All right. I know this is boring, but we're going to get to some more interesting things because once I get to the charts, you're going to be like, oh, shit. Oh, okay. Okay. You feel me? So just give me a moment. All right. Yeah, let me stop the screen. Present, share screen, window, boom, boom. All right. Like I said, it's going to be nice and boring because if you can't get through this level of boringness, you're not going to do the work. So don't even worry about, this is a special type of person. They say 97% of people fail in trying to trade, and day trading is gambling. You're throwing your money away. But from the intense studying, not just the years, but really the past 8 months of intense studying, I really understood that all these people who see people making a lot of money from trading and they try to open an account or go into a prop firm or this or that and they throw money at it, they were never traders. They never did the work. They never got the understanding. They just went and threw some money at something, and people are constantly throwing money at something because they see it as a get rich quick. So all these people who are failing, they're counting them in the number of people who fail. So I don't think that number is accurate, but we'll use it because it looks good for us as people who have the ability and the capacity. You feel me? It looks good for us. 97% of people fail and I'm doing it. Good. I'm beating a Fed case every day. It feels good, you know? But let me get to this. We want to make money. Banks have the money. How do we know where the banks are placing orders? So we can ride the wave, large movements in a short period, a large candlestick. What will that produce? A fair value gap. You feel me? All right. Now, let me put it. Must understand this. You feel me? Must understand this. All right. Can I? Wait, hold up. Where the hell is can I just command B this shit? All right, boom. Everything that I put into bold or whatever, take note of that, and you have to do an individual study on each one of those terms. Now I've made it easy for you because in the description I will provide videos that have individual studies on each one of those terms, and you don't need to go outside of those videos. This isn't a this is something, how do I say, this is not a puzzle or a mystery to be figured out. This is something that you observe and you react to. All right. Now, what's the next thing you must understand? You must understand what liquidity is, what what is liquidity? What is liquidity? All right. What the fuck did I just write here? Liquidity. Hold up. What is liquidity? Where is it? What is liquidity? Where is it? Liquidity is money. Money is everywhere. So now that you understand that liquidity is money, money is everywhere in the price chart. So how the fuck do you find the important areas of liquidity where the banks are placing their orders and trapping people and whatever you want to say? You feel me? We'll get into that. Where is it? What is liquidity? Where is liquidity? That's a question you should ask yourself. All right. Now, let me do this. What is liquidity? Where is liquidity? Money, and it's everywhere. You feel me? Money, and it's everywhere. All right. If it's money and it's everywhere, how do we know where it is important? The banks, in my estimation, in my observation, and other people, I'm not inventing shit. We're not reinventing the wheel out here. The banks are moving on an algorithmic pattern. You feel me? And I feel like they're saying that to simplify it. I don't want to get weird and mystic and shit, but I feel like this shit's rolling on the laws of vibration and the laws of reciprocity and nature and shit like that. It really gets deep. Look into Gann and the Gann box and the inventor of the Gann box and what he got into. But that I digress. You feel me? Okay. What is liquidity? Where is liquidity? Money, and it's everywhere. So how do we determine? All right. So how do we determine where the banks are manipulating the liquidity? Now, from now on, when you see the LQ, that is shorthand for liquidity. All right. When you see the LQ, that's shorthand for liquidity. All right. We are determining where the banks are manipulating the liquidity by observing that during market opens, closes, highs, and lows, the pattern just shows itself. And So if you went to somebody who was telling you some simple shit like for years and years that you wasted your time looking at the noise of the markets and trying to read the price chart, they'd be like, you go to the 1 hour chart and you're looking for the swing highs and the swing lows and you mark those off and then you do it. And then this shit's so subjective that it's all over the fucking place. You feel me? You go to the 4 hour and then you put it on a line chart, and at the sharp points and the sharp turns, you add a line in array. No, 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 no. Can you get money that way? Yes. And that's the beauty of the market. That's why I love the market. If you can zone in on one thing, even if it's stupid as shit, you can get money. Because this is the only thing that I've ever seen where you can be wrong 70% of the time and still come up at the end of the week like 6, 10 racks up. You feel me? What other profession in the world can you be totally wrong 70% of the time and still be up or and still be viable or have a career or anything like that? You feel me? But I digress. All right. So how do we determine whether banks are manipulating liquidity? We need to know, and I think this might be an ICT concept or whatever. I never got into that guy, but I've heard people give him credit for this. So this is how we determine it. Session-based liquidity and or time-based liquidity. You feel me? That's how we're going to determine it. We're going to a chart soon. This is just going to be here for reference so people can pull it back and be like, all right, this is the idea. This is simple. Whenever you're getting confused by the markets or whatnot, you should come back and reference this. We want to make money. Banks have the money. How do we know where the banks are placing orders so we can ride the wave? Large movements in a short period. A large candle. What does a large candle produce? A fair value gap. Understanding this, you must understand this. What is liquidity? Where is liquidity? Money, and it's everywhere. How do we determine where the banks are manipulating the liquidity if it's money and it's everywhere? Session-based liquidity and or time-based liquidity, which seems to they can't hide their hands. If they want to take their money, if they want to take the money from everybody, you feel me? Because the banks want to take your money, the brokers, everybody wants to take your money. They all want everybody's against us. You feel me? But we're just better than that. If they want to take your money, they have to show their hand, and that's where we got them, motherfuckers. You feel me? All right. Session-based liquidity, time-based liquidity. You feel me? And what we need to understand, session-based liquidity and our time-based liquidity is the key. You feel me? Now that we understand that, what happens at these areas? Only one of two things happen. It's either a sweep of the liquidity or it's a displacement. Or it's a displacement of the liquidity. And now we've gone from fair value gaps, understanding this, and now what are we making in bold right now? Boom. It's either a sweep of the liquidity or it's a displacement of the liquidity. So what you need to understand here? Sweeps and displacements. If you don't understand what that is, just from me saying it right now, take note of sweeps and displacements of liquidity and study what that is. And like I said, in the description, I will provide for you links to playlists of videos so you don't need to go searching and get lost in the noise. I'm saving you years of work. You feel me? And I don't even have my Cash App up. That's how magnanimous I am. You feel me? Okay, so we know where the banks are doing their thing because they're working on an algorithmic base. And here's a little sauce. And here's I don't know how do I want to drop this in here. Here I'm freestyling right now. Extra extra sauce. These sweets. Let me not say that. These reactions from points of interest seem to these reactions from points of interest seem to happen in an algorithmic pattern. These reactions from points of interest seem to happen in an algorithmic pattern. And from my observation, tend to happen more than often between the how do I say this like a time between the do it like that between the bump 50 between the bump 50 o'clock and the question mark in the question mark 10. So that time is very important. You feel me? If this is between how do I say this better? Between do I just leave like this and say blah 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 o'clock? Wait. All right. Extra sauce. These reactions from points of interest seem to happen in an algorithmic pattern, and from my observation, tend to happen more than often between blah 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 50 and blah 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 10 o'clock. And blah 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 10 o'clock. You feel me? So, for example, like 450. No, that's the end of the market. So, for example, 850 to like 910. You feel me? Or 9 or like 850 to 910 or like 950 to 1010. You feel me? It's where these things tend to happen. That's why I like the 15-minute orb, which is the 15-minute candle formed after the open. First 15-minute candle, you create a range of that candle. The first 5-minute candle that breaks outside of that range, you take a play there for a continuation. All right? But that's why that works so well, because that's happening at the 9:45. You form your orb, and then at 9:50, boom, you that's when you're open to get signals, because then it tends to happen between that window. And I wish somebody was here right now to know if I was getting too convoluted to help me put this course together. You feel me? But it is what it is. Let me get back on the track here. All right. Let me review this one more time before I go to a chart. We want to make money. Banks have the money. How do we know where the banks are placing orders so we can ride the wave? Large movements in a short period. A large candle. A large candle produces fair value gap. This must understand this. You must understand this. You feel me? Fair value gap. What is liquidity? Where is it? Money, and it's everywhere. How do we determine where the banks are manipulating the liquidity? Session-based liquidity and or time-based liquidity is the key. It's either a sweep of the liquidity or it's a displacement of the liquidity. And here's some extra sauce. These reactions from points of interest seem to happen in an algorithmic pattern, and from my observation, tend to happen more than often between, for example, a 950 and a 1010. You feel me? All right. Can I make this any simpler? All right, let's go to a chart. Boom. Let's go to a chart. Yeah, stop screen. Let's go to a chart. Oh, do I already have a chart up over here? Give me a second. Boom, is there a chart up? There's always a chart up. All right. And let me drop the invite in case anybody who trades comes up here and they want to critique or say anything, because I'm not a hater. This shit is G Kundo. All right, let me present, share screen, window, boom, share. All right. Even this. So this is a Dow Jones YM futures. This is how the market. Am I in replay right now? No. This is how the market closed on Friday, right? And we'll do some more examples, but since this is here, I'll just use this real quick. You feel me? Now, what is session-based liquidity? As you can see, can I make this look better? Or does it look good? It looks good for you guys. All right, cool. As you can see, this green area on my chart, that is the New York session. When you see this reddish, fuchsia, pinkish box, this is the London session. And I have an indicator that it's Luxago sessions that highlights these for me. And then you have the Sydney session. My bad, not the Sydney session, because I don't have that one there. Then you have the Tokyo session, and that is this orange color. It will always be highlighting this orange color. And this is an in-between session. I think there's some like Australia or some shit like that. But that also matters when it comes to time-based liquidity, but I don't know if I want to go that deep right now. All right. Now, okay, let's do this. What is, since we started with fair value gap, let's just get some examples of a fair value gap. You hear me? Let's do that first. Should I use one that's very obvious or one that's not very obvious? Let's see. Let's see what the 15-minute chart is doing. All right. For example, this was market open of Friday. And as you can see, I also have an indicator that highlights the fair value gaps. You feel me? But I like to mark them out myself, and you should always mark them out yourself so you get used to taking shots. You feel me? Repetition builds perfection. So, and this is actually a 15M joint, so I'll use my FEG 15M. And these are stacked. I would count that as stacked. So I would use both of them. So boom. You got a 15-minute fair value gap right there. Create it when the market open, right? So you take note of that. What can you take note of if you came in pre-market? Look at this shit, London pre-market. It's ugly as hell. There's not really nothing to take note of. You feel me? Let's go right here. Let's take it down to the 5-minute, see if we could peep some structure. But look at that. Just flat as hell. There's nothing to really, no gaps, nothing to really take note of here. You feel me? No real volume. So why would you fuck with that? You wouldn't do anything with that. You feel me? Now check it. Let me go back to the 15-minute. A fair value gap is like pretty easy to explain. It's a gap in price. There's more intricacies to it, but you see a large candle right here. Boom, a short candle right here, a large candle, a short candle. How the market closed right there. The market closed by producing a fair value gap. You feel me? And so on and so forth. You can find these things, let me not say all the time, but often, but which ones are significant? Which ones are significant? And you should assume that the larger gaps are, I'm not saying the small ones are significant because they can cause reactions for you. But the large ones are more significant. Why? Because the banks pump more money at that time and left orders behind. That is a footprint. And now you'll see something like, hold on, you'll see something like, this right here. Oh, that's ugly as hell. Hold up. That's ugly as hell. You'll see something like this right here. And you see I extended this fair value gap that was here. And you see this reaction that happened off of it. And what do you think? You think this is a coincidence? You think this is a coincidence? No. We have the data to prove it is not coincidence. You feel me? So let me get into it right here. All right. We're gonna do more examples, but let's do this right here just to show you how to do this. I might do it 2-3 times, but that's it. Because this is not nothing. This is something to think about, wonder. If you don't get this, then you don't get it. You feel me? You want to come up and you want to mark your session highs and lows. You feel me? If price is far away from it, it doesn't really matter. But get in the habit of marking. Get in the habit of marking them all. You feel me? Okay, the fucking dark with these shades on. Goddamn creep. So boom, I extend that over there. That is the Asia low. I take another one. No more guessing. Where is the important liquidity? The highs, lows of the session. And sometimes you'll get news which causes a spike here or there. And then the extremes of that spike are also draws on liquidity until they are mitigated. You feel me? You heard? All right. So wait, I should have put the time on that. Whatever. So we have the boom. We got the London low. And what was this one right here? So we just put the London low right there. That's an Asian low. Oh yeah, gotta mark that one. That's an Asia high. You feel me? Now, listen. This is interesting because this Asia high is also the London high. But I know I needed to make a new marker. So hold on, let me check if this got it. Do I have a London Asia? London Asia. Oh, wait, fuck. London Asia. I gotta change this. Hold on. So I want this to be illustrated correctly. This is London Asia. London Asia low. Oh shit, I'm bugging. I know this would be messed up the first time. Hold on, let me fix this. This is the Asia high / London high. That's why I'm bugging. Boom. London Asia high. It's so low that it was like fucking around in my mind. Like, is this a fucking? But this is the London Asia high. Why is this here? Because before the New York session opens, this is all the data we have. You feel me? And maybe I should do it like this. Wait, how do I select this? Is this how I want to do this? Why am I always forgetting shit? Like select bar. All right. So if we came in before New York session, you feel me? This is all the data we have before New York session. You feel me? Drop to the 5-minute. This is all the data we have before New York session opens. So just act like I didn't mark that gap. So you come here, this is all the data you have, right? And what do we also have? We have, it's easier on the 15-minute. We also have we got boom, boom. That's a London, Asia high. Asia's already open. Boom, boom. So we have the Asia low. We have the London low. Isn't it interesting that the London low is near to 50%? But we'll get into that on another class. We have the London low. Then we have the Asia London high. They're basically the same thing. You feel me? I could put you a little more, but it is what it is. This is all the data that we have. Let me get this out of here. This is all the data that we have coming into the market, right? I'm keeping it super basic. There's other things that you can know, but this is all the data we have for right now. All right, let's play. So boom. What happens? Now what data do we have? We have that price has broken out of this range that it was in between that was making this London low and this in the high of the Tokyo market. It had been caught in this range, busted out. What time did that happen? 9:30, 9:45. So this will be your. We're not talking about the orb play right now. So let me not talk about that. So let's just observe. So price takes off. Price takes off. This is the London New York crossover time, high volume, right? Now, this level got displaced. So this will be a continuation play, likely. So what could you do? You can use a mechanical orb. So this is your 945 candle. That's your 945 candle. You hit that, mark it out with a 15-minute orb. And what is an orb play? A 15-minute orb. The first 15-minute candle of the session creates a range. The first 5-minute candle to pop out of that range would be your entry. You feel me? So let's mark it out as if you played this mechanically. Took a long position. You entered right there on the close of that first 5-minute candle. You place your stop losses below the orb. And you're going for a 1 to 2. Boom. And you're going for a 1 to 2. And as you can see, you took the continuation play of the orb because that's what the market gave you at the time. There was no sweeps of a level. You were in between the London low and the London Asia high, ranging until New York opened. And at 9:30, 9:30, 9:35, right at the open, boom, volume comes into the market, right? So this just shot up. So this is a bad example for people who just jumped in recklessly because you would have still got money. But you chill because you don't have FOMO of missing out of what's going on. You don't care about any of this shit. You don't have any. This level got displaced, but that's not enough for you to commit to a play right here. And it shot up and it didn't come back. Let me use I got a path tool. Yeah. Volume came into the market. It shot up, right? And it never came back to test this level to give you an entry. You feel me? That's why your continuation play from a displacement during the in the when the excuse me, when the New York session is opening and the play continuation is all right. I'm trying to make this sound confusing. I'm trying to make this sound plain and simple. Volume came into the market during the New York session after it had been ranging throughout the night, right? It displaced the London Asia high. But we are not just breakout traders. We need more information. So we can't take a play there. So what happens? We end up having to wait for the orb or the 15-minute opening range break. You feel me? What is that? The first 15-minute candle formed in the opening of the New York session, you mark that out. That high and low becomes a range. The first 5-minute candle to break outside of that range is your entry, as you can see here. So what happens? Boom, you're in. It comes back. It tests the top of the orb, and you're out of here for your 1 to 2, no problem. That's money, especially on a prop firm. You feel me? That's money. And here's another interesting thing. If this happens, let me get this out of the way. Let me get this out of the way. All right, since it's in the name of the play, the orb, the 15-minute opening range break, right? So if this happens and I get in here, I have an entry right here, right? And then price pulled back to here, and this gave me structure right here. This was the high that it pulled back from to test the top of this range. I'm already in the play, right? I'm not telling you what to do, but why not add on when you see a continuation from the break and retest? That's where the real money comes in. You feel me? But let me continue. Now, this is something you must know. Take note. You notice how I'm not telling you too many things to take note of. Understand what the orb is and the 15-minute orb is. You feel me? Look up the 15-minute orb, understand what that is. In order to understand what that is, you're going to have to understand what a range is. And that's going to add, you understand what I'm saying? This is for you to be diligent. If you're diligent enough, I'm giving you everything you need to understand right now. You don't need to go looking in this convoluted maze of YouTube. You feel me? Now, check this out. Now, this is cool for those who can understand. Now, London session is over at 12, right? So that's 11:55 right there. So that was the high of the London session. Because you've already took a continuation play and you won for a 1 to 2, right? And this is some secret sauce, extra sauce. So this is side quest right now. Just pay attention. Boom. Where would I say that move originated from? And that's another class. This little range, it broke out of here. Boom, boom, boom. Retest it. All right, so we can do it even right here. We can do it right here. Hold up. We're doing it live, guys. We're doing it live. You can do it right here. Let's say, because this is a retest, so we know price definitely popped off from here, a little origination from there. That was the next pullback on price, right? Boom, right there. That means, according to the Fibonacci sequence or whatever, that you're coming back, you pull right back into that 50% golden zone, you went all the way to the negative 200 fib. That's a target right there. That's a play. That's an easy 1 to 2. Boom. And look, and what did that happen to coincide with? It just happens to coincide with, let me mark this. It just happened to coincide with the London high. London ended, and then there was only New York session left, right? So London ended, boom, right there. Price continues up. So since London ended, and that's the high of London, New York then swept the high of London, right? So we're just observing. And what? Look at this. What time is it? New York swept the high of London, 12:30. You get a pullback. Boom. 12:50. You're getting a retest. It's very small, but you see this you see this movement down and then slow movement up that tapped this gap. And I might as well show you this because I'll refine this class at a different time. This is my first time trying to teach anybody this shit. People who don't. This is my first time trying to teach people who don't know anything. So, boom. You see that right there? And let me mark that as FVG. Boom. You see how price went down? A little bit rise, a little bullish candle happened, tap this fair value gap, and then gave your reaction back under the London high to make this move. This is for noticers and observers. You think that's coincidental? That there's this London high, this time-based liquidity, and then there is this fair value gap right here. This comes down, it tests the fair value gap, breaks the London high, breaks the time, displaces the time-based liquidity, and then goes for its move. Is this a coincidence? You feel me? All right, so let's go right here with it. So let's see if we can get a better view if we go down to the 1 minute. Because this shit is just sliding. It's not really giving you a pullback. That's why up here I wouldn't call this a play. You have to be patient. It's not really giving you anything clear. Not really giving you anything clear. Boom. You're back under this price. That's a move to me right there. To me, it's really a move as soon as it breaks back under there. Because this level was swept. If you want to look on this, like, I don't know. I don't like stressing that. Let me not get into that head and shoulders shit. Yeah, let me not get into that. Let's take it to. It is like kind of a head and shoulders, dog. Like it's an ugly, like if you really get into the shit and you start studying, you're gonna understand what a head and shoulders is. But as you can see here, this is some ugly ass multiple shoulder type joints. Boom, you got your head right here. Boom, you got these ugly ass shoulders, and then boom, price dumps. You feel me? And this is on the 1 minute. So, all right, where's the joint at? I know people are looking at my chart. Oh, this is crazy. I don't understand. You don't understand because you don't want to understand. All right. Now, let's drop this back up here. You already caught a long off the orb today. You probably don't need to trade anymore. You caught a long off the orb today. You place your stops below the orb. You went for a 1 to 2. You feel me? You went for a 1 to 2. Boom. Actually, let me fix that. Right under the orb. So you got your one. So you got your 1 to 2, right? So you get your full play out. And I don't want to lose things, but I don't want to explain too much, right? But this can be observed. So let's just observe this real quick. Now this is a simple zone. This is a fair value gap, but it's a combination. So if you see right there, all the way to there is a gap. And if you zoom into this area, you can see that this black box I just drew, which is a gap, is a combination of these two gaps that you can see highlighted in light green. Wait, can I like hide this for a second? Can I hide this? Hide. Boom. So you can see these two gaps right here. This green shaded area, this green shaded area is right here. These are gaps that were created, right? We combine these gaps. So you over here, you already have you had this data already when the orb was broken. You feel me? Price never disrespected this gap. Look, it comes down, it presses off of it, and you're out of here. That's another confluence to know that you're doing the right thing in the right direction, right? And look how long. Wait, am I getting that shit wrong? Yeah, that's not there. Right? So you don't only have a break of the orb, you have a pullback a little bit and just tapping and respecting the 50% of this gap that was created. It never disrespected the 50%. And then if you use this as structure right here, let me use a brush. Then if you took this as structure, it's fucking ugly. Hold up. If you took this as structure right here, right? If you took this as structure right here, because it went up, pulled back, tested that gap, tested the top of the orb, and then broke up past that structure, why not add more positions? You feel me? Why not add more positions? So we discussed that, right? Let me unhide that. Can I unhide that? Wait, what's going on? Hide all indicators. How do I? If you hide something, how the hell do you unhide it? Wait, is that it? How the fuck do you, if you hide something, how do you unhide it? You know, I'll draw it again. Simple enough. Long position. You wanted a 1 to 2 off of the orb. This was the first candle that broke the orb right here. When it closed powerful like that, you took your position. You place your stop loss right beneath the orb. You want to get your 1 to 2, and boom, you got your 1 to 2, right? Now, let's say if you're locked in and you're like in good spirits and all that, and you think you can keep trading, and you're like, all right, boom, this went up. I got my 1 to 2, but this created a new London high, and it was swept by the New York session. Let me watch what's going to happen. Oh, we go up. What's the 15-minute look like? What's 15-minute look like? Look at that. And this is where your discretion comes in. But when you see something and you see something, then you see something. You feel me? So for example, now we can zoom in right there. And what do we have? This is pretty beautiful now that I'm zoomed in. That's why you have to go in on the price and see what's going on. Boom. So look what happened when it busted the London high. When New York session, London said, this is not coincidental. London session ended. New York session still continuing. It broke the high London session. What happened when it broke the high low in this session? Gap created. You feel me? Another small one here. So I would combine them. Boom. Gap created. Now, when the gap is created, it's pulled back into, we get the gap. This is 15 minute. Let's make it what it is. 15-minute fair value gap. When this gap is created, we don't have this data yet, so let's not deal with that. When this gap right here is created, what do we need to know to confirm a reversal? Just by looking at what we have right here. This gap that was created, excuse me, let me take a sip of coffee. To confirm a reversal, what do we have to do? Banks are here, right? So we know they did something. Boom, they created this gap. What happens after they created this gap? They go up, give a reversal signal. If you understand if you understand Japanese candlesticks, you understand this is an inverted hammer, also known as a I just call that inverted hammer. That's not a dragonfly doji. This is an inverted hammer, which is a reversal signal. That is followed by 3 more candles, which you can call that 3 black crows or whatever. If you understand Japanese candlesticks, I recommend you type in YouTube understanding Japanese candlesticks. It's probably going to be on Tillionaire's channel, and I recommend you watch that forever because I still watch it sometimes. You feel me? Okay, so you see this gap gets totally filled, disrespected. Boom. What I would be watching for, if I had a 15-minute gap created like this, I would drop down to the 5-minute. And I don't care about it. All this is noise. I don't care about shit until this box is closed up. You feel me? I don't care about shit until this box is closed up. Now that the gap has been totally disrespected, I might wait for a retest, but let's be real. You can place it, as soon as the gap has been totally closed by a candle body. When the gap is closed by a candle body, you can enter a position then. You want to have a generous stop loss, place your stop loss above the gap, right? And what do we want? We want another 1 to 2. And look at that. That's another 1 to 2. Now, that's a 1 to 2. This is a 1 to 2. And this is your second 1 to 2. Then you could also leave positions and write it down. I'm being conservative by saying 1 to 2s, right? In the first play was a conservative 1 to 2 because we didn't have more data yet. But now that we have more data, that the London high was swept by the New York session, still continuing, and then gave a reversal signal, formed a gap. The gap was disrespected. You can then enter a position for a 1 to 2, easy. You see how you see it? Do you see how like price pumped? You feel me? You see what happened right there? These 2 large candles, price pumped down from there. Banks made that happen. That means you were able to read and understand what the banks were doing and when the fuck they were doing it. This is not coincidence. This is not magic. You feel me? Now, I'm being conservative with a 1 to 2. But in all reality, since we have this data that this London high was created and then it was swept, a gap was created, and then that gap was disrespected. Since you have that data, you could, in all reality, enter a position from here all the way back to here. You feel me? Minimal to here. Actually, let me be real. Minimal to here, the top of this fair value gap that the move came from, because you know something's gonna happen there. So minimally, your position will probably be going to here, which would be a three wait, a one, yeah, it would be a 1 to 3.38. You feel me? So that's where my minimal target would be. That's where the minimal target is. But real shit, because we have this data, I'm gonna let it play more because I don't remember, so I could be wrong. But because we have this data that the London high was created and then swept and then created the gap and then it was disrespected, I would say from my position that I'm entering here that I can get all the way to the. I'm saying get already here. You feel me? Where there's a lot of traffic. So I say price could go here, but the real target. So this would be first target right here. So make your position. This would be first target. Once you hit this position, you shave most of your position. Wait, once you hit that take profit, you shave most of your position, right? And then you let that bitch ride to at least this level. I see it getting this level. It's too much liquidity here. I see it going here. You feel me? So let's see what happens. Let's see what happens. Pull back, bounce off the 200. Boom. Didn't get there. Didn't get there. But why does that not matter? Why does it not matter that it didn't get there? Because it gave you a lot of data. And by the time you got to this position where it reversed on you, you had already shaved most of your positions right here at a great profit already. You already up a high percentage. You shaved most of your position. This was just free riding. You feel me? So you didn't lose any money. Now, pay attention. This is how people trade all day and get paid at any time. You feel me? Because do you think this is a coincidence that I already had this London Asia high marked? And what does it do? It comes down right to where the orb was formed. It's not coincidence. The orb is formed here. You have the 200 EMA here, and you also have the fair value gap here that comes down. It's disrespected, but the 200 is here. So you're like, all right. I would never enter a position here, especially not for a sale. Why wouldn't you enter a position for a sale here? Because let me use my GAN box. And I know, if some people were hanging around, they could let me know, oh, the screen looks too crazy. I'm not understanding what's going on. Ignore everything else and concentrating on what I'm doing. You feel me? There's candlesticks, and there's what I'm doing right now. You feel me? So this is the most recent low point. Man, where the fuck is? All right, got my GAN box. This is the most recent low point. This is the most recent high point. Price is currently in the low area. You feel me? In the discount zone. Why would I try to sell when price is in the discount zone? It's fucking stupid. You feel me? But you are getting a sweep. That's why you need to understand sweeps and displacements. Because if a candle body closed below this London Asia high, that would have been a displacement, but it didn't. It went, tapped it, wicked through it, closed above it. That is a sweep of that area and a test of that area. And that is also happening off the 200 and in the discount zone, below the 50% in the discount price zone. So what could you assume you could do here? You could assume that you can take a buy, right? So that's what I would be looking for. Now, how would I find that? Drop down to the 1 minute. We're coming up right here. What can we see? What can we get? Where's the number? That's it right there. This black line right here is a London Asia high right here. Price comes, doesn't touch it, whoo, wicks it. Boom. We got a little gap right here. Disrespect it, wicks it. Now this is where the patience comes in. Because I go through here. Ooh, see, that's nice. That's nicer. So I go, so the 1 minute didn't give me the interest I was looking for. So I'm gonna go down to the 2 minute. What do I see? Boom, rejection. Now this is interesting. This is something that I can show you right here. Let me move this over. So you got that play right there. Now, look at that right there. You see how price came down and created that gap right there? Pulled back, respected it, boom. Hitting this Asia high, respecting it, decisions are being made. Went back up into this gap, respected it, boom, back down, pushed off from here again. Back into this gap, pushed down, respected it, doom. Back up, still respected it, doom. Back up is fighting it. Look at the bears and the bulls fighting. Boom, the gap is closed. What happens when this gap is closed? We also get when that gap is officially closed, what's happening? Simultaneously, this structure is about to be disrespected. Boom. Let me make it thick like that. The same time this gap is filled, this structure is being disrespected. We are getting a true market structure shifts, a true change in character. What's happening at the same time simultaneously? You get a breakup over the structure, you get a retest over the structure, and then you get a larger candle produced. We know volume came into the market. Now, some people will get it right there. I might get it right there, God damn it. You feel me? But let's say you want to be more careful. Let's say you want to be more careful, very conservative. You see this happen. Boom, pull back. What do you have right there? Perfect test of the golden ratio Fibonacci. You feel me? So, what would I be able to do at that time? I'm going for a long position. Right when this candle closes, right there, we're in for a long position. We place our stops. Stop is in a pretty good position, but let's give it a little more place to breathe. We put it right under that structure, and then we will look for preferably a 1 to 2. 1 to 2, but we would take note of the traffic that's going on here. So 1 to 1 easy, no problem. 1 to 2 is well, that's whatever. 1 to 2 is there. So you would have got your 1 to 2 too. Also, just following market structure, following gaps, and following session-based, time-based liquidity. That's it. There's more information I can give you, and I will break it down in the full in the more comprehensive breakdown. This is just to get my thoughts together because there's things you need to understand. And let me do this because I came this far, so I came this far, so I might as well do this. Let me do this. Let's go back to present, share, window, share. All right. We want to make money. Banks have the money. How do we know where the banks are placing orders so we can ride the wave? large movements in a short period, a large candle. A fair value gap is created by a large candle. You must understand what a fair value gap is. What is liquidity? Where is it? It's money and it's everywhere. How do we determine where the banks are manipulating the liquidity? Session-based liquidity and or time-based liquidity is key. It's either a sweep of the liquidity or a displacement of liquidity. There's nothing else. Extra sauce. These reactions from points of interest seem to happen in an algorithmic pattern from my observation, tend to happen more often between the 9:50, for example, and the 10:10 o'clock, for example, and so forth and so on. You feel me? I'm about to end this, but for people who are really interested in what's going on here, things that you want to know, just take note of this and then do your own study. These are things that are not mentioned above. Anything I said to already take note of that, but take note of this. You want to know what is a draw on liquidity. You want to know maybe I should leave it ambiguous like that to see who's really gonna dig and get into this shit. Because I can start talking about other types of draws on liquidity, but all right, yeah. What is a draw on liquidity? You must know that. You must know what a draw on liquidity. You must know what a draw on liquidity is. And and I'm here for you. If you want to speak to me, we can talk about this shit. You can ask me questions, but that if you ask me questions, it lets me know that you really want to know. You feel me? Or you do your own study like I did. So it's like, what is a draw on liquidity? All right. Here's something else that you want to know. Why? No, you don't need to know why. Understand. No, just understand this. Understand that perfect equal levels are unnatural. Understand that perfect equal levels are unnatural, and understand that perfect equal levels are unnatural and therefore created by the banks. These are strong draws on liquidity. All right. Now, I wish there was somebody here to you saw this. Start the camera. Let me talk to you. I wish there was really somebody here to critique how it's conveying the information, because this is years and years of study without a mentor, and I've amalgamated this. The closest thing I have had to any type of mentorship of any type is Playbit community. Shout out to Ty, Bitcoin Playboy. Pause. You feel me? But other than that, it's just me and Omni in my Discord. We come into collaboration with each other every once in a while. And let me do this. Let me do this. Let me do this. Let me do this. Let me drop the link to my Discord at the end of the video. So if anybody, all right, how do I get the link? So easy to get the link on my phone. How do I get the link? All right, let me do it like this. I'll do it from the phone. Hold on, we'll do it from the phone. Give me a second. Let me close this shit. We'll drop the Discord community at the end. Hold up. Because if anybody stuck around through this boring shit, they really want to get this money. You're a different type of person. You understand? So hold on a second. Boom. Invite. Copy link. YouTube. Boom. And we know what this isn't a channel for this. I have another channel, Technical Players Club, and that's going to be more professionally presented. But this was just a test stream for myself to get into teaching mode and to understand to myself how to teach and see if I'm sounding confusing or convoluted when I'm trying to explain something that's become very simple to me without forgetting that I've been studying independently for years and intensely for the last 8 months. And I've studied so intensely in the last 8 months that it's definitely brought me to an epiphany, a higher level of understanding. The devil can no longer hide his hands. You feel me? When you're trying to understand the financial markets, especially without a mentor who's giving you the direct sauce on how to do it, it's going to be overwhelming, highly confusing, infuriating, gut wrenching, anxiety, anxiety. What's the word? Causes anxiety. It's going to cause high levels of anxiety. Blah blah blah. Right? But for the very few who can get through all that, great rewards await you. And there's data to prove this. You feel I don't need to flash some lifestyle to you for you to understand what is already known. Well, what's understood don't need to be explained. You feel me? What's understood don't need to be explained. So I think I've said everything I need to say right now. I'll review this later. This is disagreeable. I'm disagreeable. We are disagreeable. And this has been another one. Where the fuck is my mouse at? Bullshit. Oh, there we go. Peace.